Lastly, not to forget about stainless, the nickel side of things, it looks a lot like the rest of the base metals complex, where things were trying to get a little bit of a holding. And then in the last couple of days, we got some fairly negative news out of China, where they're having continued zero COVID policies, locking down. That's feeding through to depressed pricing within really the entire base metals complex. And nickel is no exception. We're back down into the low $9 per pound range. We're below all three of the moving averages from a momentum standpoint. And similar to aluminum, we're kind of in the low 30s for the relative strength index. So there's a lot of pressure right now across a lot of these metals. The question is, do traders step in and say, enough's enough, let's start to buy some of this and take some positions? We're seeing a little bit of it within our customer base on hedging. I still personally think that there's a little bit more of an argument to be made around aluminum than there is around nickel. That's just my personal opinion. And really that just centers around the idea of the cost of making it. That if you're trying to find a floor, the cost of making the product is a pretty good rough start to kind of put your finger up and say, this is around where prices should begin to bottom. Because if they don't bottom there, more and more producers shut down. In the case of nickel, we're not really near cost support yet, based on the estimates I've seen. Cost support really doesn't kick in until I'd say $8, maybe even $6, $7. So we're a ways away from that marginal cost of production within the nickel world. Doesn't mean it can't find support above that, but I just think the dynamics within nickel are a little different than the aluminum space. And the other thing kind of weighing on the nickel market sentiment overall, I know we've talked about this in months past, but this is the open interest, which is just a fancy way of saying volumes traded within the London Metal Exchange nickel contract. And you can see that since the short squeeze that occurred that drove prices to the moon, traders have left the market. So banks have probably left the market, traders participating in the market have left, and that just decreases liquidity. It decreases the number of eyes who are watching the market. So that can sometimes lead to disjointed market conditions. It can lead to just kind of dull market conditions. But to put a number on it, the volume traded is down about 31% since that short squeeze. So it's a meaningful number. And yet we haven't yet seen that recover.